Hello, and welcome back to the Crypto Channel. Don't forget to subscribe to our channel and give this video a like and share. In today's video, we are going to analyze the technical aspects of Bitcoin and altcoins, review their price prediction for the current year, which is 2021, and analyze their price variations and predictions. So, without much ado, let's start the video. What are Bitcoins and altcoins? Probably many of you have heard the names Bitcoin and altcoin already. Having money in any currency is always a boon. With the progress in the technological sector, the currency has also taken a fun ride and gone digital. Digital currency is apparently one of the most complicated topics to understand, as the market for it is still taking shape. Bitcoin and altcoin are different in a few aspects, and similar in other few aspects. For the purpose of a better explanation, let's understand both separately. Bitcoin is a part of the concept of digital currency. Just like a normal currency is traded in the market, Bitcoin is also traded by the investors in the market. Without any doubt, it is the most popular form of digital currency. A lot of investors have placed their bets on Bitcoin since its inception. Three platforms that are most commonly assessed by the investors to trade Bitcoin are Coinbase, Kraken, and Binance. If you are just starting your journey in the world of digital currency, then Coinbase is the perfect platform for you. For investors who are looking to earn more money by seeking lower fees charged by a platform, then Binance is the go-to platform for that. Kraken offers what everyone seeks before getting into investment: customer service. Let's now talk a bit about altcoin. An altcoin is similar to Bitcoin in terms of trading. It is also traded in the market by investors. The main difference lies in altcoin being every other digital currency except Bitcoin. In simple words, altcoin serves as a perfect alternative for investors who are looking to trade digital currency other than Bitcoin. The cryptocurrency market demands a decent percentage for volatility, and altcoin does that perfectly. It offers the lowest volatility in the market. This is also a reason for it accounting for nearly 40% of the cryptocurrency market as of March 2021. When it comes to digital transactions, altcoins present one of the least expensive methods. With the feature of low transaction expense, altcoins are on the verge of becoming greater than Bitcoin in the market of digital currency. It is estimated that once these altcoins gain the majority of the market, they will start to function independently, as their trading to some extent is currently dependent on Bitcoin. The reason for this dependency is that altcoins were derived from Bitcoin. Altcoins can broadly be classified into 5 self-explanatory categories, namely mining-based, security-based, stablecoins, tokens, and utility tokens. Technical analysis and price prediction in 2021. It does not matter how complicated it sounds. The market of digital currency can always be understood with ease by conducting a systematic analysis. A stock market is a place where shares of listed companies are traded. Now, consider the digital currency similar to this trend. Investors invest in stocks of a company only if there is confidence in the market about its performance, leading to their profitability. Similarly, an investor trades his or her money in the market of digital currency only if there is a scope for it to earn profit. No one really likes to invest where there is no profit, and this makes absolute sense. This is one reason why the calculation of return on investment, or ROI, plays a very important role before one decides to invest their money in any market. The correlation between the stock market and the digital market also extends to the fact that with the rise in the demand of digital currency, or with the rise in the investment in digital currency, the cryptocurrency market has begun to assume to be a part of a broader market. The broader market basically refers to an increase in the reach of the market to more investors. Yes, the extension is good, as more investors would lead to more money being traded, but there is also a downfall that needs to be considered. As the cryptocurrency market expands, the formal manipulation or the institutional manipulation, would also begin. If reports are to be believed that this has already started to happen, in fact, this has been happening since 2017. There has been no light on this issue as the digital currency market is yet to reach more investors and traders. One point that we must note is that there is a possibility, only a possibility, of digital currency losing its value for a while due to the COVID-19 pandemic and low sustainability in the market. Even with the lesser reach, a digital currency market has established a decent standard for investors to predict its price in 2021. If one is to assume the bearish scenario, then it would be safe to say that the lowest it can go is $20,000. It may, however, even go as low as $5,000 to $7,000. But this would require a huge crash in the market, which currently seems to be a far-fetched possibility. One reason why it could touch the lowest value is the traders beginning to withdraw their money to invest in another safe scheme, like a government bond. A government bond may offer a low return on investment, but the guarantee that it will offer an ROI makes it a better option than the cryptocurrency market. The other aspect to this point is imagining the creation of a bullish market. In such a scenario, it has been predicted that the value of cryptocurrency can go as high as $500,000. The best possible range, or a definite range, that can be achieved is $100,000 to $200,000. With this, it is expected to get equal to the price of gold. Price analysis. There is always a question as to what controls the cryptocurrency market, or what pattern does it follow? This question can be answered by using the 4 price patterns defined by Richard D. Wyckoff. Every pattern can be categorized into 4 different phases. The first phase is the one when the market begins. This phase sets a price pattern called accumulation. In this phase, investors get in and put their money based on the estimation for return on their investment. The second phase is called markup. This price pattern sees a rise in the value of the investment as many investors continue to enter. During this phase, a low investment seems to be a good promise to generate returns higher than expected. The third phase is distribution. Distribution as a price pattern begins to offer a return to the investors. The decision to withdraw at the prevailing rate of return remains solely with the investor. An investor who understands the trends well decides to withdraw his or her money from the market. This leads to the creation of the fourth phase, which is called markdown. With the majority of the investors withdrawing their money, the market begins to experience a decrease in the rate of return. This also increases the chances of one losing their money if it is not withdrawn at that particular moment. The cryptocurrency market, or any market, does not come to an end after the fourth phase. Trading and investment consist of similar phases with ups and downs. One recent example that can be quoted is from the months of April and May. Some investors overestimated the performance of the digital market and did not withdraw their investment. Since many investors did withdraw their money, it led to a major crash of the market. This, however, was recovered by the market, and things now seem to be normal again. In this video, we reviewed the proper definitions of Bitcoin and altcoin, reviewed their analysis from technical aspects, understood their price prediction for 2021, and learned how the trading cycle works in the market of cryptocurrency. We hope that the video was useful and informative. Like this video to stay motivated. If you want to see more about cryptocurrencies, then make sure to subscribe to our channel and press the bell icon. We will now meet in the next video. Till then, stay safe and healthy.